Thursday, November 5th, 2020, Maneco 64, home of alternative economics and contrarian views. So the central banks are at it again. For those of you who have been watching my videos for months or years, it's not surprising. I said in a video earlier this year that the Bank of England was going to get its balance sheet to around £1 trillion by November, sometime in November. And today they've announced at 7 a.m. this morning. Bank of England used to announce their decisions at 12 o'clock at noon. So now they're trying to keep these crazy measures away from the public spotlight. Of course, it's going to come out in the headlines, but for the markets, they need to announce this like really early to try to manipulate the markets when the markets are thin. So they announced 150 billion pounds more in QE, which is huge, considering that the UK economy is worth around 2 trillion in GDP per annum. This is pretty big increase here. So it's even more percentage-wise than the Reserve Bank of Australia did the other day when they announced 100 billion Aussie dollars in QE. The Bank of England balance sheet is going to reach $1 trillion very easily before the end of the year. And today, of course, we have the Federal Reserve coming out with their announcement, and there will be a press conference as well. It's not going to be a meeting where they make the forecast, economic projection forecast. Yes, they announced months ago already, earlier this year, that QE was going to be unlimited, but they could announce maybe an increase of pace in QE, especially now with the fact that there's political uncertainty and it could take a while to get a considerable fiscal stimulus out. We could see a huge monetary stimulus from the Federal Reserve. So yeah, crazy times monetarily. Of course, there's so many distractions out there. And as I've always said, and I'll keep saying, half of people's commercial transactions, half of those transactions consist of using money, and if they destroy the currency that you use through the creation of that currency out of thin air ad infinitum, the more worthless that currency is going to be, the harder time you're going to have keeping your standard of living stable, the harder it's going to be keeping your savings from getting debased through inflation. And again, I will repeat, this is inflation. This is not deflation. When a central bank creates almost 10% of the economy overnight like that, out of thin air, it's not deflation. Wake up, people. Don't listen to these crazy people out there. I'm not going to use the word crazy, who are saying that we've got deflation. Please tell me, when was the last time that your grocery shop bill went down, when you haven't had packages of things shrink and the price stay the same? Tell me when the last time that was. Tell me when the last time was that your rent or your other utility bills actually went down. So yeah, it's going to get worse, unfortunately. And this is what the FT says. Bank of England launches 150 billion stimulus to boost consumer spending. Monetary Policy Committee forecasts double dip recession for UK due to resurgent coronavirus. I think if the Bank of England wanted the consumer to start spending again, they could maybe tell the government, this virus, the IFR is not that bad. Why are you shutting down the economy? Let people live. But no, they're going to create 150 billion. I guess people are going to go onto their computers and start buying stuff from Amazon. It's crazy, crazy world. The Bank of England doesn't know the difference between real wealth and economic activity and money. Just because you create funny money doesn't mean you're going to create wealth. All you're going to do is create a nightmare of currency debasement. So what else is going on in the world? A lot of distractions, as I said. Well, I don't have to tell you what's going on in the U.S., do I? And I think it's far from over. I don't think President Trump is going to be a normal lame duck if that's what they're going to start calling him in the mainstream media. And I'm not going to go further into what's going in the U.S. I think, it's going to be turbulent times until January 20th. And we could end up having Nancy Pelosi as president as well. That's one of the outcomes that you could have if there's a lot of disputes as far as the election is concerned. Here in the UK, of course, today we're starting our new lockdown for this so-called pandemic. It's amazing. I saw a cartoon the other day saying that, when was the last time there was such a bad pandemic that you had to test to see if you had the disease, right? I mean, if it was really bad, you wouldn't have to test. You'd be dropping on the streets, dying on the streets. You wouldn't have to test. So anyway, let's look at the markets now. It's 8:06 a.m. London. We've got gold, spot gold, of course, not futures or ETFs here. We don't look at paper gold. Spot gold is at 1911, up just over $8. The high has been 1914, the low 1891. I think in the longer term, medium to longer term, the key level here is going to be around 1933 or thereabouts. And why do I have that level instead of the 1923, which was the 2011 high? Well, it's because it's the high from last month. And if you look in the last few months, gold has made lower lows on the monthly chart. So I think if we break through 1933, we could see a resumption of the bull market in gold and silver. Silver is up almost 50 cents, just under 2%. At 24.35, the stock market is continuing to trade higher here. We're up 1% in the Dow futures, 28,120. S&P 500 is up 42 points, 1.24%. The NASDAQ 100 futures up almost 2% at 12,000. I guess the financial markets don't care about election fairness or anything. All they see is that you could have a Green New Deal with the Biden administration. You could have a great reset AI economy led by the gnomes of Davos, right? And that would be good, of course, for the tech companies, the big tech that have been censoring the alternative media, of course, over the last few months in the run up to the election. So the NASDAQ is at 12,000, NASDAQ 100 future. The currencies, the pound, I would say it should be down. It was down earlier today. I guess it was an expectation of this announcement, but it was a lot more than expected, the QE announcement. I think the market was expecting 80 billion. They did 150 billion. And you'd think, when a central bank creates more money out of thin air than expected, the currency should go down. But we are not in a normal environment. So the pound right now is up 0.25% at 130.22. The euro is up 0.2% at 117.50. The dollar is down 0.2% versus the yen at 104.34. And the dollar is up slightly versus the yuan at 663. WTI crude is down just under 1%, just under $39. The 10-year yield to finish off here is at 0.73, down 4 basis points. Yes, the bond market is expecting that it will be tougher for Biden administration to be able to get stimulus through Congress because the Democrats were not able to gain control of the Senate, it looks like. But I think in the end of the day, they'll get a lot of stimulus through. There will be a lot more debt coming down the pipe. Don't be deluded to think that there won't be. Don't forget, under Trump, the national debt is ballooned as well, and we've had huge budget deficits. So I don't expect things to change no matter who is in charge in January, be it President Trump, be it President Biden, or be it President Nancy Pelosi. I think the red ink is going to keep flowing. And even if we don't get as much fiscal stimulus in the next 2 months because of the uncertainty, don't be fooled into thinking that the Fed won't do something about it. They're going to put their foot on the pedal even more in terms of money printing. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And if you do, make sure you hit that little notification bell to be notified of all my new videos. And you can also follow me on Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.